Well, hello and welcome to this Money Control Live. I'm Nandita Khemka and you're watching Morning Trade on Money Control. Well, over the next 30 minutes, we'll be talking about the cues for trade, the stocks in focus, and of course, we'll also be getting all your stock-related queries answered by our technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street closes higher in a volatile session. Tech outperforms as investors bet on the Fed nearing an end of its rate hike cycle. Regional banks close off lows as Treasury Secretary Janet Yellen now says that additional action will be taken to stabilize the US banking system if warranted. European markets closed lower after hotter than expected inflation report sees the Bank of England raise rates by 25 basis points. The Swiss National Bank too raises rates by about 50 basis points as it looks to counter persistent inflationary pressures. Asian markets largely lower this morning while the SGX Nifty is hinting at a weak start for the Indian market. Let's see whether or not Nifty manages to maintain that 17,000 level in trade today. And IT stocks will be in focus as Accenture reports record bookings in the second quarter, says it will shed 19,000 jobs as part of cost-cutting measures. Also lowers FY23 guidance on expectations of a weaker third quarter. Well, we'll be talking about how the trade will pan out today with our technical expert on the show. But before we do that, we're joined by Kaustubh Pawaskar of Sharekhan to discuss the outlook on paint stocks and what one should be doing with some of these counters in trade. Good morning, Kaustubh. Good to have you on the show. Last week we saw a very colorful rally come in on some of these paint counters given the cool off in crude prices. But this week we have seen most of that rally fade away. Yesterday we had Jefferies come out with a report on Asian paints where it has advised a sell on every rally for the stock, and it sees a 10% downside from current levels. But given the fact that oil prices have eased, what would this mean? In fact, this will actually bring some respite in terms of input cost for these paint companies. How would you view Asian paints now in that sense?
Yeah, hi. Good morning, Nandita. Decline in the crude prices, we have seen that last year during the same time, crude prices gone up significantly, and it impacted the margins of the paint companies in the quarter one of FY 2023, where we have seen gross margins declining substantially. However, the prices are now lower and they are trading at much lower compared to what it was last year. So obviously it will have a positive impact on the margins of the paint companies. So we will see gross margins to further improve in quarter four of FY 2023. We have already seen in quarter three margins seeing an upmove because of the reduction in the crude prices and crude derivatives, and that should sustain in quarter four as well. Going ahead, we should also expect, if crude prices stabilizes or raw material prices stabilizes, we should expect, a company taking some price correction, which will help them to see some bit of recovery in the volumes in the quarters ahead, because the pain is at the mass end of the portfolio, especially in the rural markets. Urban demand was quite resilient, but we should expect if raw material prices corrects from the current level, we should see some bit of pricing action, which will help paint companies to see some bit of recovery at the mass end of the portfolio as well in the quarters ahead. So talking specifically about Asian paints, we should expect margins of Asian paints to improve in quarter four. The management in Q3 conference call indicated that they have seen volumes recovery in the month of January, and that momentum is expected to sustain. But we should not expect volume growth to be significant. It should be somewhere in the range of a high single digit for the mid to high single digit for the company in the coming quarters. But in terms of margins should substantially improve in the quarters ahead.
Right, margins should substantially improve for Asian Paints in the quarters ahead. But tell me, how much of a threat would Grasim's entry be for paint companies' margins? You know, Asian Paints, as you all know, has managed to retain its pole position as it has efficient processes and unmatched product quality. And in spite of many players entering into this space in the years gone by, Asian Paints has, held on to its position. Do you think Grasim's entry poses a big threat to Asian Paints? And how does this bode for the other paint makers?
See, it is too early to comment whether Grasim will act as a major threat to a leading player like Asian Paints, because it has already a strong distribution reach. It has a strong product portfolio. It has a leadership position in the paints category. We have seen company, planning to make investment of more than 6,000 crores to expand its capacity, and this is obviously, these steps are taken, considering the strong competition which is coming into the paint industry. Obviously, in terms of margins, we should see, most of these paint companies going for higher media and promotional activities. So that will have some impact on the margins. So we should not expect the margins to be at historical high. There would be some bit of impact on the margins because of the competition coming up. But in terms of the positioning, I don't think Asian Paint, it will have any significant impact on the positioning of the Asian Paints. I would rather believe that player like Grasim entering in the market, there would be some bit of market loss for the smaller players rather than a strong player like Asian Paints in the coming years.
Right, so it will be a big threat for the smaller players rather than Asian Paints. But aside of Grasim's entry, what are the key risks that you are, that could emerge as a threat for this industry now going forward?
See, there would be, Grasim is a formidable play, and they already have a strong, distribution in its cement business. So obviously, it will utilize that for its paint business as well. And obviously, it will lead to a higher competition. And we should see, most of these large players becoming aggressive in the market. So obviously, in terms of margins, there would be some bit of pressure, considering, as I said, the promotional and the marketing activities will improve and will increase. And because of that, there would be some bit of pressure on the margins. But obviously, for the smaller player, there would be a risk of the higher competition. And we should expect player like Asian Paints, they should continue to add more, will continue to add more and more products into its portfolio. That will, and obviously, distribution is something which all the paint companies are looking at in the domestic market. So so that is something which large player will definitely look into, to mitigate the competitive risk. But obviously, in the near term, Grasim would act as a competition pressure for most of these paint companies.
Right. Since you also track Indigo Paints, I want to ask you that this company is foraying into waterproofing, construction, chemicals to expand its reach. And it is also increasing its sales force by somewhere around 40% in the next few months. How does this bode for the company, given the fact that at least the shares are trading well below the IPO price now?
Yeah, so Indigo Paints, the valuation are reasonable post, the sharp correction what we have seen. The company, the scale is quite low, and the focus is on expanding the distribution reach in the smaller as well as the tier 1 and tier 2 markets. So that is something the company is focusing on. And around 27% of its portfolio, is a differentiated portfolio, which is the higher margin portfolio. So once the scale happens for the business, we should also expect margins to improve. So it is more of a distribution play for the Indigo Paints, where it is trying to build up its position, trying to gain market share from the smaller players through its differentiated product strategy. So that is something which will help Indigo Paints in the long run. But we should what kind of new products and it is going to add to its portfolio, how the strategy of expanding into the tier 1, tier 2, market will work for the company. So that is something which will be keenly monitored in the coming years. But obviously, the scale of the business will improve once the distribution expansion happens for the company, and that is something which will also help company to see better margins because of the better operating leverage. But obviously the competition risk is there, so how the company position itself in terms of competition which is coming up, that is also something which will be monitored. But at the current evaluation, the stock looks quite reasonable.
Right. Well, with that, thanks a lot for taking out time and joining us this morning, Kaustubh. I look forward to chatting with you again sometime. Let's shift focus to the market technicals then. Joining me now is Raja Venkataraman of Neo Trader. Good morning, Raja. Good to have you on the show. Flat to negative cues coming in from SGX Nifty yesterday. We managed to stage a comeback around midday, but then all the gains fizzled out. But we still managed to shut up above that 17,000 level, yesterday. So, what are the kind of support levels you'll be watching out for in today's session?
Yeah, good morning, Nadita. The way the markets are currently panning out, clearly there is a very clear evidence that there is absolutely no clarity at all. Be it the global cues or be it the domestic cues, the trends continue to be stifled at higher levels. So the whole message continues to be a sell on rally approach. So I would look for selling on rallies towards 17,300 to 17,400. And now for the moment, the immediate supports which are emerging is somewhere in the region of around 16,900 to 17,000. So now as we speak, the SGX Nifty is already indicating a subdued start. And the overall trends continue to indicate that, yes, there could be a soft approach as we start the day as well. Now, the clue for the entire index trajectory is lying with Bank Nifty. Based on the option data which is available, I see some kind of, hold up at the lower levels around 39,500. So if I were to look into the markets and if I were to take a position, then definitely it will be from the Bank Nifty perspective for a revival above 39,500. So currently it is barely holding above those levels. So if it holds above 39,500, we could once again see a rally closer towards 40,500 on the upside. Now, the overall scenario is a sell-on rally because market continues to be under a bearish grip. So those who are looking to play the indices should wait for a rally to go short rather than short at the current juncture. Now, support levels on the indices around 16,900 and on the Bank Nifty is around 39,500. If these levels break, then we can expect more downside in the coming days.
Right, so that's the call on the Nifty as well as the Bank Nifty. Let's also talk about Reliance Industries. We have another report coming in from Jefferies, and it has, it sees a good 30% upside on the stock from current levels. The stock has been in a downtrend, but did manage to stage a comeback. Do you expect the stock to head higher in today's session? Because yesterday it was pretty muted. What do you expect it to do today?
See, we are continuously discussing about Reliance, but then the overall trajectory in Reliance continues to be a very muted approach because there is no specific triggers as such. And what has happened is over the last 3 months especially, the decline has been quite prolific. And the kind of consistent decline which we saw post the breakdown below 2,300, the momentum will continue its way downward. Yes, people will have some positive news. Brokerages house will maybe issue an upgrade, but then the overall sentiment continues to be on the negative side. So I would be looking at rallies to short, current levels to short, and overall Reliance is appearing to be headed to more to the downside. And I would expect the target zone towards 2150 in the coming days.
2150 target on Reliance in the coming days. Let's take up some queries coming in this morning. We have a query from Gaurav Sharma, and he wants to know your thoughts on Tata Steel. On a YTD basis, the stock has cracked somewhere around 12% or thereabouts, and we have seen weakness set in, but analysts are fairly bullish on some of these steel companies. What would you advise investors to do now? Should they look at buying into it, given the fact that it is trading quite 20 to 30 rupees off its 52-week highs?
Yeah, from the kind of movement which I am seeing right now, it is barely holding on to some support levels. And if we were to go below 100, right, I could expect that it could continue much lower. So right now, we are at a very crucial juncture in this stock, and we should hold on to these levels. And especially if you want to participate, then it is an avoid from my side, because clearly there is no direction in this stock.
No direction on the charts of Tata Steel for now, so avoid this counter. That's the call. What are your thoughts on the IT pack? You know, Accenture yesterday reported a strong set of numbers, even though it has trimmed its guidance. The positives are far outweigh the negatives. Some of these counters like Infosys, Tata Steel, in fact Infosys and TCS are some of the counters that could have a positive takeaway from Accenture's earnings. Do you expect some of these companies to edge back into the green today?
Yeah, yes, there will be a momentary impact, if I were to say. But then if you just take a look at the kind of beating the IT stocks are witnessing, I expect that the rally which you will see will only attract more shorts. So now a positive news from Accenture results rubbing off on the IT stocks. You could use the rallies to sell into. See, the whole market is on a sell on rally mode at the moment. There is no positive triggers which are coming out, and we would have to wait probably for the Q3 results to come out somewhere in mid of April. Till then, there is no positive triggers which are emerging, and as a result, every rally that we are seeing is being sold into. So now today could be a good time to look at rally in IT stocks and then sell them, because overall structure of every IT stock continues to be on the negative side.
Right. Deep Khanderia and Karthik had queries on the IT sector. I hope this answers your query. Let's also take up another query on M&M then. Livin Dev has sent his query on M&M, and he wants to know your thoughts on this counter. A lot of these auto companies have, announced price hikes from April. Stuck in a range, what would you advise investors to do with some of these companies like M&M and Tata Motors, Eicher and thereabouts?
Yeah, the entire auto sector has also been caught in the headwinds, and right now I can see that the auto sector is somewhat, you can take M&M, you can take Maruti, all of them seem to be stabilizing at the moment. So if I were to place my bet amongst the auto stocks, I would definitely look at Maruti, because it has come to its December lows and it is once again staging a rebound from lower levels. So if you had to look at the auto space, then Maruti would be a better bet.
Maruti, a better bet in the auto space. Let's take up a query on Titan then. Jitin Chadda has written in and he wants to know your views on this one. Now, on the back of a rally in gold prices, Titan has been shining in trade, and the charts are looking pretty positive. Over the last 1 month, it has gained somewhere around 5%. Would you advise investors to take a bet on this counter now?
No, I would not advise a bet on Titan at this current juncture. Yes, the gold rub-off effect, which did pull up the prices, I can see that it has now moved up into an important resistance zones around 2550. So I would wait for a closing about this on an EOD basis before I take a call. So right now, yes, the move was good. Those who encashed it, I have to look at these levels to book some profits here. You can look to add to your position about 2550 or enter about 2550, but only on a end of day basis.
Right, that's the call on Titan. Moving on to the PSU basket, Satya CK has written in, he wants to know which stock is looking better now, SBI or Canara Bank from the PSU lot. What would you advise?
So from the Can Bank has been under severe pressure, and Can Bank definitely witnessed a very strong decline. But what I am noticing is that after the fall which I saw in Can Bank, I can see that the entire move which is in the bearish pressure which I am seeing in Canara Bank is coming to a closure. And this would be a good point to enter Can Bank with a very, the stop loss is also very close, which is around 270. So it would be a good multi-day play if banks were to recover from here. But then the caveat here is that the bank Nifty should hold. That's very important. So track the bank Nifty before you enter into Can Bank.
Right. Keep an eye out on Bank Nifty before investing in Canara Bank. The next query is coming in from Debaprata Mohanta, and he has a query on Varun Beverages for the time frame of 3 to 5 months. It's had a fairly good run in the last 6 months. And, but on a YTD basis, it's up just about 1.5% or thereabouts. Would you advise investors to hold on to it if they have the counter, or is it time to sell into every rally?
So right now, if you're holding Varun Beverages, the good zone would be to sell around say 1400 to 1420. At least exit partial of your position, because that has been its previous high. But then, in addition to this, if it is able to scale above this, you should definitely look to book some profit at the levels mentioned, 1400 to 1420. But if it crosses that, then you can look to add as well, because then it will look to stage a new high. Because the overall trend is positive, and it is definitely a counter to be tracked and invested into.
Right, so that's the call on Varun Beverages. The next query is coming in on Dish TV. Har has written in, and he wants to know your views on the counter. Last 5 to 6 sessions, it's lost somewhere around 6% or so. The losing streak is expected to continue here on?
Yeah, the overall structure is fairly negative. It is expected to continue. So if you're holding a position, then you should be exiting it below 13. Otherwise, it's strictly an avoid from my side.
Right, strictly an avoid. Raja, I also want to get in your thoughts on Campus Activewear. There's a large block deal expected to take place at open. TPG is likely to sell its 7% stake. How should one play this counter in today's session, given the fact that there is a news flow surrounding it?
Yeah, so yes, there are some positive news flows which are coming in, but then the way the price action is indicating, and the way the entire stock trajectory has been displayed over the last almost 3 to 4 months, it is definitely pressured to the downside. So I would not be looking to participate in this counter and invest, because there definitely is much more triggers needed for participation, which is not visible at the moment.
Right, Raja, I also wanted your thoughts on Vedanta. Yesterday, the stock tumbled over 5%. There were reports of a stake sale by Anil Agarwal, which of course he denied. And the company will also be considering its 5th interim dividend for FY23 on the 28th of March. Given the kind of news flow surrounding this company, what should one do with Vedanta now if one is looking to trade into this counter?
Yeah, if you're looking to trade into this counter, then the trade would be on the short side. There is no scope of positivity here. Plus, the metals are having some impact from the global commodities as well. So you can look to trade on the short side, but there is no cause or there is no indication for a long trade here. So you could look to sell at current levels, use rallies towards 82 to 85 to initiate a short, because that's also a very good supply zone.
Right. I think we're running out of time, so this wraps up our query segment for today. But Raja, what are your recommendations for our viewers today?
Yeah. So considering the two-phase nature of the market, I would also have one long and one short. So I'll be going with a short in Voltas with a stop at current levels, with a stop loss above 845 for a target of 815. And I would be buying into Kolpal at around 1520 with a stop at 1495 for a target of 1555.
Well, those are the stock recommendations coming in from Raja this morning. Well, with that, Raja, thanks a lot for taking out time and joining us and answering all of your queries so patiently. Well, with that, we're completely timed out on this edition of Morning Trade. But coming up next is Opening Bell, so stay tuned for that. But for now, it's a goodbye from me and the entire team that put the show together.